All right, let's dive into tech ETFs and how to potentially grow, say, $2,000 in this market, especially with the AI boom happening.
That's fighting.
It is. And a Motley Fool article titled, The Best Tech ETF to Buy with $2,000 Right Now will be our guide for this deep dive.
That's interesting.
They talk about how a small investment can grow significantly, especially in tech stocks, a sector that's been, doing pretty well, particularly with all this AI stuff.
Yeah, AI has been a game changer.
Totally. So the article recommends tech ETFs.
Okay.
They specifically mention the Invesco QQQ ETF, which tracks the NASDAQ 100.
Right, then that.
And historically, it's outperformed the S&P 500.
Not bad.
Not bad at all, but then they say the VanEck Semiconductor ETF, or SMH, might be even better, especially for 2025.
Really?
Yeah, it's apparently beaten not just the S&P 500,
Wow.
but also the Invesco QQQ ETF and the iShares Semiconductor ETF over the last decade.
That's impressive.
For sure. And what's interesting is that the VanEck Semiconductor ETF, it focuses solely on semiconductor companies.
So the companies that make the chips, right?
Exactly. The ones powering all this tech, like AI systems.
Right, right.
So why is this particular ETF so special? What makes it a top performer?
It all comes down to its top holdings giants like Nvidia, Taiwan Semiconductor Manufacturing Company, TSMC, and Broadcom.
Those are big names.
Absolutely. And together, they make up over 40% of the entire ETF.
40%? That's a huge chunk.
It is. It shows how heavily weighted it is towards these major players.
So let's talk about these companies individually, starting with Nvidia.
Yeah.
They're like leading this generative AI explosion.
Now, their GPUs are basically the gold standard for AI.
The article mentions they have a 95% market share in data center GPUs.
25%. That's massive.
Right. And their last quarter showed a 94% revenue growth.
Wow, they're really riding this AI wave.
They are, but with that much dominance, are there any potential downsides for investors?
That's a smart question. It's always important to consider the risks. While Nvidia is doing incredibly well right now, any major shift in the AI landscape could impact them.
So it's not a guaranteed win forever.
Exactly. Diversification is key.
Which brings us to TSMC, a company I honestly didn't know much about before.
They're kind of the unsung heroes of the tech world.
How so?
They manufacture a huge chunk of the world's chips, over half of all third-party chips, and, get this, about 90% of the advanced ones.
90%? That's mind-blowing.
It is. They're behind so much of the technology we use every day.
And they've seen significant growth too, right?
Absolutely. 37% revenue increase and a 56% jump in earnings per share recently.
But TSMC is based in Taiwan, right?
Yeah, that's right.
Given the, the geopolitical situation in that region, isn't that a risk for investors?
It's definitely something to consider. Any instability there could disrupt their operations.
And that could have a ripple effect on the entire tech industry.
Absolutely.
Okay, last but not least, there's Broadcom.
Right, Broadcom.
How do they fit into this whole AI puzzle?
They're interesting because they're not solely focused on AI. They're known for networking components. But they've also seen a massive surge in AI demand.
So they're playing both sides.
In a way, yes. Their AI revenue jumped by 220%, thanks to their AI XPUs and those Ethernet networking components.
So they're more diversified, which could make them more stable, right?
Potentially, yes. It's like a trade-off. Stability versus explosive growth.
That makes sense, finding the right balance.
Exactly.
The article also mentions the VanEckSemiconductor ETF's price-to-earnings ratio, which is 38.
Okay.
It's higher than the Invesco QQQ Trust at 35 and the SPDR S&P 500 ETF at 28. But they say the growth potential justifies it.
Interesting.
So can you explain what a price-to-earnings ratio actually tells us?
Sure. It's basically how much investors are willing to pay for every dollar of a company's earnings.
So a higher ratio means?
It suggests investors expect significant growth in the future. They're willing to pay a premium now for potential profits later.
But it could also mean the stock is overvalued.
That's right. It's a bit of a gamble.
A calculated risk, then.
Exactly. Understanding this ratio is crucial for making informed investment decisions.
It's about understanding what you're getting for your money.
Exactly.
Now, the article also brings up former President Trump's announcement of at least $100 billion in private sector investments in AI data centers.
Oh, wow.
That's on top of the already crazy valuations of AI startups like OpenAI and Anthropic.
That's a massive influx of cash into the AI space.
And it could supercharge the industry's growth, right?
Definitely. And companies providing the infrastructure for these data centers could benefit immensely.
Which brings us back to the VanEckSemiconductor ETF.
Right back to it.
It seems well positioned to capitalize on this AI investment surge.
It does, with its focus on key players like Nvidia, TSMC, and Broadcom.
So this ETF could be the ideal way to ride this AI wave.
It's a compelling argument for sure.
But I have to ask, are there any downsides or risks we haven't discussed yet?
Of course, no investment is without risk.
Right.
We've talked about concentration risk with so much weight on just 3 companies.
And the geopolitical uncertainties around TSMC?
Exactly.
But are there other things to consider?
Well, the semiconductor industry is very competitive. New players emerge constantly, and existing players are always innovating.
So even companies like Nvidia could face challenges down the line.
It's possible the tech world moves fast.
So staying informed and adapting is key.
Absolutely.
It seems like investing in tech ETFs is about more than just picking the right one. It's about staying informed and being ready to adjust.
You got it. Knowledge is your best weapon in this game.
All right, so we've covered a lot about the VanEck Semiconductor ETF, its strengths and its risks. But before we move on,
Yeah.
this ETF is heavily focused on companies directly involved in the AI boom.
Right.
But if AI is going to transform almost every industry,
Which it likely will.
wouldn't that mean there are other investment opportunities out there? Companies that might benefit indirectly from AI's growth.
That's a very insightful point. We've been focused on semiconductors,
Yeah.
but the impact of AI reaches far beyond that.
So where else should investors be looking? What other industries or companies might be worth exploring?
Well, think about it. If AI needs massive amounts of data,
Right.
industries like data storage, data security, even data center infrastructure could see huge growth.
It's like a ripple effect, the AI boom spreading throughout the economy.
Exactly. And if we consider the ethical implications of AI, which we haven't even touched on today,
Oh, right.
that opens up a whole other realm of possibilities.
So while this specific ETF might be good for some investors,
Yeah,
it's just the tip of the iceberg when it comes to AI investment opportunities.
absolutely. That's what makes this so fascinating.
It's not just about analyzing one investment, it's about opening our minds to the bigger picture.
Exactly. It's about connecting the dots and seeing how this transformative technology will reshape the world.
I love that perspective. It's about the journey of knowledge.
Couldn't have said it better myself.
All right, folks, that's it for part 1 of our deep dive into tech ETFs and the AI boom.
Great to...
We've explored the VanEck Semiconductor ETF, talked about the potential of AI, and now we're ready to dive even deeper.
Looking forward to it.
Join us for part 2, where we'll explore additional investment opportunities that might be flying under the radar.
Sounds good. It's pretty amazing to think about how AI is, like, changing everything, not just the stock market.
Right, it's impacting so many aspects of our lives.
Yeah, we're talking about tech that can make art, write code, translate languages, even have conversations that, feel almost human.
I know. I've tried some of those AI tools, and it's both fascinating and a bit scary how fast it's all happening.
It's natural to feel that way. I mean, it has the potential to change the world as we know it.
Definitely.
But let's focus on the positive for a second. Imagine AI helping us solve some of the world's biggest problems.
Like climate change, diseases, poverty, those are huge.
They are, but think of the possibilities. It's inspiring, right?
Yeah.
And that's what makes investing in companies at the forefront of AI so exciting.
It's like you're part of something bigger, contributing to a better future.
Exactly. And that brings us back to the VanEck Semiconductor ETF.
Right.
By investing in it, you're essentially betting on the success of these key players in the AI space, the companies building the foundation for this tech revolution.
So if someone invests, say, $2,000 in this ETF, what kind of return could they expect?
Well, we can't predict the future.
Of course.
We can look at the past performance of the VanEck Semiconductor ETF to get an idea.
Like that chart we mentioned, showing how it outperformed other ETFs over the last decade.
Exactly. It jumped almost 10 times in value.
Yeah, that was pretty impressive.
Well, we can't guarantee anything. It suggests this ETF has strong potential, especially if the AI boom continues.
And the Motley Fool article seemed pretty confident that it will.
Right. They mentioned all those private investments and the skyrocketing valuations of AI startups.
It definitely paints a picture of an industry that's still growing rapidly.
It seems safe to say AI is not a fad. It's here to stay.
And the companies making the hardware for AI systems are likely to benefit from that.
I'd agree with that.
But what about risks? Every investment has some level of risk, right?
Absolutely. And with the VanEck Semiconductor ETF, there are a few things to keep in mind.
Okay, like what?
Well, there's concentration risk. Remember we talked about just 3 companies making up over 40% of the ETF?
Nvidia, TSMC, and Broadcom, right?
Yes, so if something happened to one of them, it could significantly affect the whole ETF.
It's like putting all your eggs in one basket.
Exactly. Diversification is important.
Makes sense. What other risks are there?
The semiconductor industry is known for its ups and downs. Demand can fluctuate, which can lead to price swings.
Okay.
And there's always competition. New companies pop up all the time, and existing companies have to constantly innovate.
So even companies like Nvidia, who seem to be dominating right now, can't rest on their laurels.
That's right. Things change quickly in the tech world.
So investors need to stay informed and be ready to adapt.
Absolutely. Knowledge is power, especially in investing.
It sounds like it's not just about picking the right investment. It's about staying engaged and understanding the market.
Exactly. The more you know about the companies, the industries, the trends, the better decisions you can make.
This has been really helpful in understanding the AI landscape and the potential investment opportunities.
Glad to hear it.
But before we move on to exploring other ways to invest in this AI-driven future,
Sure.
is there anything else we should keep in mind about the VanEck Semiconductor ETF or any tech-focused investment in general?
Well, one crucial thing to remember is that while the potential rewards can be exciting,
Yeah.
it's super important to approach any investment with a balanced view.
You mean don't get carried away by the hype?
Exactly. Do your research, understand the risks, and never invest more than you can afford to lose.
So be smart and don't get blinded by the potential for big returns.
That's right. It's about making informed decisions and being prepared for any outcome.
Great advice. Now let's shift gears a bit. We've focused a lot on the VanEck Semiconductor ETF.
Right.
But the world of tech, with AI on the rise, offers so many other investment possibilities.
For sure.
So where else should investors explore if they want to tap into this AI-driven growth?
Think about it this way. AI needs massive amounts of data to work.
Okay.
So which industries benefit from that?
Data storage companies.
You got it. Companies like Western Digital and Seagate will likely see increased demand as we need more and more data storage.
And it's not just storing the data, it's also about keeping it safe.
Right. Cybersecurity becomes even more crucial when dealing with vast amounts of sensitive data.
So cybersecurity companies would be another area to consider.
Definitely. Companies like CrowdStrike and Palo Alto Networks, which offer those advanced security solutions, could see a lot of growth.
This is really interesting. It's like a whole new world of investment opportunities opening up.
And we're just getting started. Think about the physical infrastructure needed for all this data and AI processing.
Data centers, right?
Exactly. They're becoming essential, and companies that build and operate them, like Equinix and Digital Realty, are worth looking into.
We started with one ETF, and now we're uncovering all these interconnected industries that AI is impacting.
It's like peeling back the layers of an onion. More and more complexity and opportunity with each layer.
That's a great way to put it. It shows the importance of thinking beyond individual companies or sectors.
Right. When you're investing in a transformative tech like AI, you have to consider the bigger picture.
So we've got data storage, cybersecurity, and data centers. What else are we missing?
We've talked about the hardware and infrastructure, but what about the software and services that make AI work?
The brains behind it all.
Exactly. Companies like Microsoft, Google, and Amazon are all investing heavily in AI platforms and cloud computing.
They're the ones providing the tools for others to build AI solutions.
That's right. It's not just about companies using AI. It's about companies enabling AI.
This is amazing. It's like AI is creating a whole new economy, a data-driven ecosystem with so much potential.
And we're just at the beginning. The pace of innovation is incredible.
This is a lot to take in, but it's exciting. It seems like AI is going to impact almost every industry.
It probably will.
But how do we, as investors, make sense of it all? Where do we start?
It's a great question, and it's something we'll explore more in the next part.
Okay.
But before we wrap up this segment, here are a few key takeaways.
Perfect. I think we could all use some guidance after that whirlwind tour.
First, remember AI is not just one thing. It's a diverse field with many applications.
So don't try to do everything at once.
Exactly. Focus on specific areas that interest you and align with your investment goals.
Specialize, don't generalize.
Second, research is crucial. Don't just invest in a company because it says it's involved in AI.
Don't fall for the hype, right?
Look beyond the buzzwords. Understand the company's business model, their competition, their growth potential.
Do your homework.
And finally, remember that AI investing is a long game.
Right.
This technology is still developing. There will be ups and downs.
Patience is key.
Exactly. Patience and a long-term perspective are essential for success in any investment, especially with transformative tech like AI.
All right, that wraps up part 2. We've gone from one ETF to a whole network of industries benefiting from AI.
It's been a great discussion.
But there's still more to discover. Join us for part 3, where we'll delve deeper into the practical side of AI investing.
We'll explore strategies, tools, and resources to help you navigate this exciting and complex landscape.
Welcome back to our deep dive. It's time to get practical about investing in this AI-driven future.
Time to put that knowledge to work.
Yeah, how can our listeners actually start investing in this AI future?
Well, there's no magic formula, but there are strategies and resources to help navigate this landscape.
So where should someone even begin? Individual stocks, more ETFs, other options?
It all depends on your risk tolerance investment goals and the time you're willing to put in.
Okay, let's say someone's comfortable with some risk, wants to pick individual stocks. Any tips for finding those promising AI companies?
One strategy is to focus on companies developing core AI technologies. You're the ones building the algorithms, platforms, the tools that power AI across different industries.
So like Google, Microsoft, Amazon, the big players we talked about.
Exactly. They're heavily invested in AI research and have a strong track record, but don't overlook the smaller, more specialized companies.
The ones with those niche AI solutions.
Right, they could have huge growth potential.
Any examples?
Sure. Companies like C3.ai, focusing on enterprise AI software, or UiPath, specializing in robotic process automation, those could be worth checking out.
Okay, focusing on those companies developing core AI tech, both the big names and the smaller players. That's a good starting point. What about for investors who are a bit more risk-averse? Are ETFs still a good option?
Absolutely. ETFs are a great way to get into the AI sector without picking individual stocks.
Because they offer that diversification, right?
Exactly. You're spreading your investment across multiple companies instead of putting all your eggs in one basket.
Makes sense. And there are a bunch of AI-focused ETFs out there, right?
There are some track broad AI indexes. Others focus on specific subsectors.
Any recommendations for someone just starting out with AI investing?
Well, the Global X Robotics and Artificial Intelligence ETF, BOTZ, is pretty popular. Tracks companies involved in robotics and AI.
Okay.
Another option is the Global Robotics and Automation Index ETF, or BOBO. Similar focus, and for AI chips specifically, there's the VanEck Semiconductor ETF, SMH, the one we discussed earlier.
So there's an ETF for everyone, but choosing the right one can still be tough. Any advice on how to narrow down the choices?
Definitely. First, think about your investment goals and risk tolerance. Are you in it for the long haul or looking for a more conservative approach?
Right.
Then look at the ETF's holdings. Make sure they align with your interests and your investment strategy, and don't be afraid to dig into the prospectus. Really understand how the ETF invests.
So do your homework. Don't just jump into any ETF with AI in the name.
Exactly. And remember, you can always talk to a financial advisor for guidance.
Good point. Sometimes it helps to have an expert in your corner. Okay, so we've got individual stocks, ETFs. What about other ways to invest in AI, like venture capital or private equity?
Those are options, but they're usually for more experienced investors, those with a higher risk appetite and a longer investment horizon.
Okay.
Venture capital is investing in early-stage companies, which can be risky, but also very rewarding if those companies take off. Private equity is investing in established companies, but not those publicly traded.
Got it. So maybe not the best place to start for someone new to AI investing.
Probably not. It's best to begin with investments you understand and that fit your risk profile.
This has been super helpful. We've covered a lot of options, but AI is changing so fast. How can investors stay ahead of the game, make sure they're not investing in yesterday's technology?
That's a key question. It's all about continuous learning, staying informed about the latest in AI.
Easier said than done. There's so much information out there.
It can be overwhelming, but there are resources to help. Industry publications, research reports, even podcasts like this one can offer insights and analysis.
So stay curious, keep learning, and don't be afraid to ask questions.
Exactly. And remember, investing in AI is not just about making money. It's about being part of something big, a technological revolution that could change the world.
Absolutely. It's about understanding the power of this technology and investing in the companies shaping its future.
Couldn't agree more.
That wraps up our deep dive into tech ETFs and the AI boom. We've talked about the potential, the risks, the practical steps you can take to get started.
It's been a great discussion.
Do your research, stay informed, never stop learning. The future of AI is bright, and there are so many opportunities out there.
The potential is limitless.
Thanks for joining us, and until next time, keep those minds curious and those portfolios growing.